Okay, so welcome this afternoon. Thank you very much for joining us in the dark hours of Friday, 3 p.m. Hope everybody didn't have too many carbs for lunch, and quite an interesting topic, and a topic that's kind of relevant for most, and if not all people at this stage, and which is all about know your numbers. My name is Jeremy Ambrose. I'm from Entrepreneurial Spark. I'm also a director here, and the purpose of Entrepreneurial Spark is to build great people who build great businesses. I am joined today by some fantastic people. Actually, we've been very fortunate to get these guys on the panel. First off, we've been joined by Sam Horner from Futrli. He is the VP of Commercial Partnerships, and I'll give a quick overview. Futrli being educational and advice and AI-powered tools to help you understand your financials. Is that a good summary, Sam?
You know what? You could come and work for us, Jeremy.
Perfect. Also on the panel we have Alpaca. Now we have Anna Ashford, who is a board advisor and lawyer, and also Sally Gwilliam, who is senior employment solicitor. Easy for me to say, at Alpaca. Alpaca, a group of professional thinkers, in-house legal team and financial team, or experts, deliver a rounded professional service to business owners of any size. And those guys are based in Leeds, actually. Good enough? Is that okay? Want to add anything?
No. We like to have our why is to help businesses grow, working with SMEs.
Perfect. But I hope you do introduce yourself when you come onto your areas anyway. So, and finally, well, not finally actually, because we've been joined by a guest appearance. But the other panelist who's been advertised is Jane Hartley. Jane Hartley is a director in capital and debt advisory at Ernst Young. Ernst Young being, you've probably heard of them, multinational professional services firm, headquartered in London, but more so thought of as one of the big four accountancy firms. So thank you very much for joining us. And as I alluded to, we have a guest who wasn't on the bill, which is Gilda Smith-Lee. She'll be answering questions from a local government point of view. I know people are trying to access funds and access information. She's here, so Gilda is the Senior Economic Development Officer at Leeds City Council. And as I said, she's just lending here in her government point of view. So a little bit about the structure of what we're going to do. We've got about 10 minutes each as panelists to give you top tips. We're going to try and cut through the noise that's out there right now and give you some actionable points to just go and do something, take action in your business. And we'll have the Q&A open. So if you do have a question, please direct it to the bottom of the screen on the Q&A panel, and we'll put those to the relevant person as towards the end. If you do have a question, please direct it to an individual or an organization, so we know who needs to answer that question. And the panel have assured me that if we don't have an answer to the question, we will get back to you with the right answer to that question. And everybody's nodding their heads on the panel, so that's good news. The other thing is the chat box will be open, so if you just want to have a chat or lay some thoughts down, please by all means do that. And I've just clicked record, so anybody who's late to this, please know that this is being recorded and will be used for just to help entrepreneurs, small businesses, medium-sized businesses, anybody who wants a leg up in the future to get that leg up. So yeah, okay. I think that's intros, welcome, and structure of what we're going to do. So I will kick off our first 10 minutes, and this includes mindset and behaviors. So we always like to, Entrepreneurial Spark, we always like to kind of run things via the mindset of the entrepreneur. This is our roadmap to success. And the point of this is we're not here to say you have to do all of these things at all times when running a business, but just know when to dial this up and dial it down. And areas of these things will be comfortable for you, but there'll be areas of this that'll be uncomfortable for you. So knowing when to dial it up and also go and get the help and ask the questions is really, really important. The part of the roadmap that we're looking at right now is I know my numbers, which is hugely, hugely important. We we sent out a newsletter to over 18,000 people last week, asking them, filling a survey, and one of the questions was, what are your top 3 concerns right now? And the majority of that audience was very much small businesses, or small business owners. The top 3, number 1 was keeping my business going, big concern. Number 2, cash flow, and number 3, supporting my family. When you kind of look at those as a whole, zoom out, then it's kind of apparent that they're inextricably linked to knowing your numbers and getting the best out of your figures, facts, numbers to move forward. So that's why we've put this on, and that's why we have the panel of experts who are going to help us navigate this this rocky road, I guess. So, top tips, definitely from a mindsets and behaviours point of view. We do see a lot of fear of failure through fear of numbers, and conquering that fear. Now is a good time to actually go and have a go at some numbers and see what those numbers are telling you right now, because certainly part of the journey that has changed is your customer's journey. Their buying habits have changed, their decision making is different, and how does that now affect your numbers? What do their actions and their behaviors mean for your business and your numbers? So go and find out, go and see what's changed, see how the pain points have changed as well. We ran a power hour the other day on actually, is it the right time to be selling? Is it the right time to be going out? And what value should I be adding right now? Should I be lowering my costs? And it was interesting because nobody wants a race to the bottom during this time. Nobody wants a race to the bottom. Everybody wants to create enough value to keep their customers on board. And value doesn't have to be a cash figure or a number. It can certainly be value add, helping somebody through this tough time, which will keep them as a customer and allow you to have that conversation when they when we eventually get through all this that's going on. So I think being able to communicate whatever you're doing through your numbers and about your numbers to your customers is really going to help you not to be the winner in that race to the bottom, but add enough value to stay relevant when we come back out of this. Which leads me on to that empathy and emotional intelligence. It is more and more important right now to stay human. Really, really just stay human. Your customers are going through everything that you're going through right now. And it is, it's trying to wade through all that, but with a human touch. So go and walk a mile in their shoes, go and understand their pain points, what's changed with their journey and what's changed with your customers. And therefore, how can you change to match those pain points? Engage with your customers. I think I've said it before. I won't kind of re-emphasize it, but yeah, how are they finding it? Just ask a simple question and be human. I don't like numbers as much as the next person, especially when it comes to business numbers and trying to wade through and understanding it, but they do tell a great story. And if you can create a story off the back of your numbers, almost with, seeing all those matrix coming down behind you, if you can make sense of that, then you can tell a great story. That'll then lead you on to being able to inform the business decisions, which is a first point of call. First point of call through knowing your numbers. For any decision made in business is knowing your numbers and how whatever decision you're making is going to affect those. The other big thing, I think, we're talking to people about going for investment, talking to people about what they have to do right now. Are people still investing? If you do know your numbers, it will enhance that buy-in and trust. Again, it kind of comes back to that human side, but being able to just get buy-in and trust by talking to your numbers and being able to walk somebody else through the numbers will get you investment. Now, when I say investment, I don't necessarily mean money in through the door. What I mean is somebody who might actually want to spend time, resource, give you that helping hand or leg up. So knowing your numbers will inform your business decisions, but at the same time will also help you get the buy-in and the trust that you need to move forward. And one last thing, I think this comes from a number of one-to-ones that we've done with entrepreneurs over the past couple of weeks. It's very much people being scared to actually carve out time to focus on their numbers and knowing what to do with them, and simply just carving out time. It can be an hour, 2 hours, to really know your numbers throughout this will help you to understand what your short, medium, and long-term goals will be and can be, and it'll just give that little bit of focus for you to move forward and continue up that mountain towards that big vision of yours. So there are top tips. That's our action plan from Entrepreneurial Spark to you. Please go and do something with that, because the main thing is, I think throughout this whole thing, inaction is going to be the killer of most businesses. Just go and take action and do something differently. Cool. So on to our first partner, and that is Sam from Futrli. Sam, a quick introduction for you and then into your top tips. That'd be great.
Yeah, sure. Well, firstly, it's like you've set this up and planned this, isn't it? Because it's a perfect flow. Yeah, so I work for Futrli. Futrli, we provide software that gives you three-way cash flow forecasting tool. So when I say three-way, everyone goes, what the hell does that mean? Essentially, it's predicting your cash flow, your balance sheet, and also your P&L. So when Jeremy talks about get to know your numbers, essentially we built technology to be able to show you your numbers, and actually we'll say you are going to run out of money, in 6 months or 8 months, whatever it may be, or actually you're flying, this is where you're going, build your KPIs and everything else that goes with it. We also offer a simplistic cash management tool that you plug into QuickBooks and Xero, and the idea is it pulls through on a daily basis invoice data saying this is what you need to do today. You're 25% dependent on one customer, you need to start balancing out your portfolio, or you're paying your suppliers too fast, slow down. So again, we're built to help accountants and small businesses, but ultimately it's the small business that we want to support. My founder, Hannah, was a small business and still is a small business owner, and she wants to, her mission essentially is to help the survival rate of small businesses, because 50% fail in the first 5 years. Granted, that's before COVID. Unfortunately, those stats are probably going to get worse before they get better. But we're working very closely with lending platforms as well to provide CBIL applications, because part of the application that people don't realize is you need a three-way cash flow forecast, and you need real data to understand exactly what's going on. So we built that and designed that. That's aside, but I just wanted to make you aware. So the first thing I would say, and actually, if I could, I'd make all 5 of these points the top one: speak to your accountant. I know Jane will like me saying that, but genuinely speak to your accountant. The accountant right now is the NHS for small businesses. They are the ones who, if they are on the ball and they are doing what they said they were going to do, then they will deliver and help support you as a small business. If they're not doing what they say they should, or they say they would, I heard a horror story just the other day that, and I think it might have been Jeremy who told me actually, somebody had spoke to an accountant and they said, yes, I can see you on the 26th of April. Now that business might have gone by the 26th of April. Nobody knows. So again, it's just about making sure that you've got the right person behind you. And if you don't, we have a list that we can happily put you in touch with the right accountants. And I'm sure obviously Jane would be able to support on that. Protect your invoices. If you've done work, you want paid for it. You want paying for it, But unfortunately, right now there's uncertainty to what's happening with the people that you've obviously contracted to. So we developed. We didn't know this was happening, by the way, but about 4 weeks ago, we launched invoice protection within one of our products. So you can insure up to 90% of your invoices, of the invoice value, and it's cost between 0.5 and 2%. It's not huge amounts of money, but it gives you the peace of mind, no matter what happens to that customer of yours or that client of yours, you will get paid that 90%. Okay. So that would be the first thing. Secure the business you've already done. Forget, not even thinking about what's to come for future. The third point I would cover is any new customer you receive or bring on board, put them on direct debit from day one. Now, I know this is a kind of an obvious thing, but it's amazing how many people will be trailing and wait 31, 28, 31, 45 days to be paid, which we know right now cash is king. You need the money in the bank. So you can simply look at, Google Go Cardless. They're an amazing tool and I think also as a small business as well, a lot of banks won't give you the facility until you hit a certain turnover or you've been with them for a certain amount of time. I know from years ago, I worked at a startup law firm years and years ago, and we were going out for £15,000 contracts and asking them to set up a standing order. Doesn't look professional, doesn't give you the credibility that you deserve. The things like GoCardless, like Stripe and so on, they give you that credibility, and again, the guarantee that you're going to get that payment, or as close to as guaranteed, so you're not chasing debt. Now more than ever, daily and weekly bookkeeping. So keeping on top of your numbers, as Jeremy said earlier, you need to know your numbers day in, day out right now, because we don't know what the end is, you know, whether it's going to be the next 15 days or whether it's the next 15 months. You need to know exactly what's going on in your business. Again, very simplistic tools that you can work with. There's, you know, Receipt Bank. You can sign up for probably £10 a month, which will automate all of your receipts and invoices and extracts the data and push it through to an account software for you. You can use things like auto entry. There's all sorts of tools that are out on the market. If you're unsure of any of these, or I want to ask any questions, I'm more than happy to cover these, you know, offline. And the fifth one, again, it's just enforcing what Jeremy said earlier. Look at forecasting. Look at actually what is my run rate. Stress test your business, and there's tools out there, Futrli, that can do this for you and say, okay, let's put scenarios in place. What happens if my revenue drops by 50%? Where does that leave me? When does the money run out? Do I then need to reduce wages by 40%? You know, does furlough help with this? How long does it help me for? But all of this that I've told you here is just, I know it's things that if I was running a business, I wouldn't want to touch any of them, because they're not the things that you're passionate about and the thing that you went into business for. But now is the time. And if you're not comfortable with doing any of these, then go back to point one and pick up the phone to the accountant. And again, if your accountant is not doing this for you, or tells you they can't see you till the end of April or into May, you need to speak to an accountant who can help you, because again, they are the NHS for small business, and they will get you through it if you choose the right one and engage with them.
Perfect. Thanks so much, Sam. There are a couple of questions already on the question and answer, but what we will do is come back to those, if that's okay. We've got one for EY and one for Sam so far. So excellent. All right. Next top tips are going to come from the folk at Alpaca. Now, I'm going to introduce you. If you could introduce yourselves, that'd be fantastic. And yeah, run through your top tips.
Okay. Thank you. So Alpaca, we are growth specialists. We work with what we call enlightened SMEs, the kind of SMEs, entrepreneurial businesses that Entrepreneurial Spark work with, people with open mindsets, growth mindsets, and open to that kind of external challenge and support. We, in terms of our skill sets, it's a real kind of mixed bag. We have legal, finance, HR, sales, learning and development, procurement, pretty much everything a business needs, all within the team at Alpaca. And what we do is we basically take those skills and work with our clients closely to understand what their ambitions are, establish those ambitions, and then work through kind of market insights, understanding where the business is, and then we will come up with a plan, a growth plan to help get them to whatever their ambitions are. And then the bit that really sets us apart is using those skills that we have to then implement that plan in partnership with the business. So that's a little bit about Alpaca. As I've obviously touched on, we've got the various different skills and expertise in-house. What Sally and I are going to talk about is we're going to sort of focus on the legals today and the things that you're probably all thinking about. I think certainly for me, the things I've seen with clients is that the key thing at the moment is obviously looking at how to keep sales going and to keep your supply chain moving. And the problem obviously that so many of us are having at the moment is that people just aren't in a position to actually do what was agreed and to keep those relationships going. So there are some legal tools out there that you've probably heard talked about in the press or in the papers. and that is force majeure and frustration. But I mean, they are very rarely used in day-to-day business at the moment, partly because they've got a pretty high threshold before they can actually be activated and used, and partly because I think there's often much more cost and time-effective ways to deal with an issue rather than falling back on these legal remedies. So having said that, I'm not ashamed to admit that I've had to get the books out and dust those books off and do a bit of reading up on force majeure and frustration, because they're not really things I've had to deal with since being at law school last century. So I thought it would be useful just to quickly explain what they are, so that if you are faced with it, you at least know what someone's talking about. So basically, force majeure is a contractual remedy. So there'll be a clause or a right in your contract to either end or suspend the contract, generally without either party incurring any liability to the other one, where they've had to terminate that contract. And it's generally where there's some, apocalyptic event like acts of God and rioting and flooding, and obviously now we're talking about coronavirus. So that event, whatever it is, has to mean that it's become impossible to comply with your bit of the contract. So, whether that is providing a service or hosting a platform or, delivering widgets, whatever it is you do. And obviously, importantly, making payment under that contract. So it can't just be that it's become harder or it's no longer a profitable contract. It's got to be that it's pretty much impossible. There aren't standard force majeure clauses. You'll see different ones that might be two lines long or 2 pages long. So it is a case of going back and having a look at the contract to see what it says, to see if it's something that you or your supplier or customer can rely on. I would say it's probably unlikely that it will specifically refer to viruses or pandemics, because, like I said, they're so rarely used that lawyers don't tend to, pay that much attention to them when they're drafting it. But it may well be that, this situation can be implied into your contract. So if you do have somebody talking to you about force majeure, then the first point of call is to go and have a look at your contract and see what that says. The other word that we've mentioned on the slide here that you might have heard is frustration. And frustration it's very similar in effect to force majeure. So I won't go into the technical legal differences, but the main difference to be aware of is that this one is a common law right. It doesn't come from the contract. So even if your contract doesn't have a force majeure clause, you might be able to rely on frustration in this situation. They are valid legal remedies. We'll have to wait and see how often they're going to be used and how the courts are going to interpret them. And we've already seen a couple of weeks ago now, but Primark, I think, were one of the first to cancel all their orders, and they were relying on the force majeure clause. So it is happening, and I suspect there will be some pretty chunky litigation coming out of it, but probably at the sort of the much higher end of business in terms of the big retailers or the finance companies. So is it something that you should be looking at? I'll be honest, I think probably not at this stage, and probably uncommon for a lawyer to say, but I would suggest actually stepping away from the contract at the moment and just speaking to your suppliers and speaking to your customers and trying to see if there is another way of finding a solution, be it deferred payment terms or looking at later deliveries or whatever that might be in order to get you all through. Because I think at this stage the last thing you really want is to get into a costly, expensive, time-consuming legal battle on top of the whole shitstorm that everyone's in anyway. So it's worth having a look at the contract, understanding what your bargaining position is and what the fallback position is. But I think, much like Jeremy talked about, I think for me this is going to be much more about engaging with your stakeholders, your customers, your suppliers, your clients, and working together to try and find a solution, rather than jumping both feet first into a legal battle with them. That is a very similar approach as I think I would suggest in terms of dealing with your landlord. I'm guessing most people have rental premises and leases. We've just had the March quarter day last week where rents fell due. You may well have seen that the government has stepped in and have prevented landlords from being able to forfeit leases for non-payment of rent. Forfeiture, if you're not aware, is basically where the landlord can come in and change the locks and effectively kick you out the property if you've not paid your rent. We're seeing very different responses from landlords at the moment. I think that we've seen some where landlords are being very, very proactive, very, very supportive, and have actually agreed to just waive the rents, you know, for the next 3-month period. At the other end of that spectrum, we have landlords who are still threatening forfeiture. I was helping a client yesterday who has a couple of offices with one of the big national landlords, and they are still threatening to come in and lock them out if they don't pay, which obviously frustratingly they can't actually do at the moment. But I guess it's sort of indicative of the fact that those landlords are themselves struggling for finances at the moment. So it feels as though, you know, the government have stopped them being able to kick you out of the property, but that effectively just pushes that problem slightly further up the chain, and that now sits with the landlords, who probably have their own, you know, finance companies and loans and stakeholders to answer to as well. I think the other point that's worth making on this is, whilst the government have suspended forfeiture for 3 months, it doesn't prevent a landlord from taking action to recover the rents. So they can still issue debt proceedings to recover the rent, and they can issue a winding up petition against you for recovery of the rent. So it's not a completely foolproof situation at the moment from the tenant's perspective. There are still things that the landlord can do, and certainly a winding up petition is a pretty explosive action for them to take. So again, I think the point here is to be as proactive as you can, to engage with the landlord and try and see what you can agree with them. Certainly the client that I was talking to yesterday, what they are trying to do is explain that they simply do not have 3 months rent at the moment. They want to pay, and they will almost drip feed the rent as and when cash flow allows them to see if they can get the landlord to agree to that. And then finally, from my perspective, looking at directors' duties. Obviously at the moment, everybody's focus is very much on just trying to keep the businesses alive. And when I first started thinking about this, the underlying position was that the law hasn't changed. The law hasn't changed on directors' duties and responsibilities of directors to look after creditors rather than shareholders at a time when, you know, they might be facing insolvency. But again, you might have seen that there are now government proposals to suspend wrongful trading as well during this period. Again, a bit like the suspension of forfeiture, there's still fraudulent trading, and directors can still be disqualified, which I think with that, I think that's still sensible. That's going to prevent, you know, the directors who are out there just to look after themselves from going and, you know, stripping out cash from the business and leaving everybody else high and dry. So if those proposals do come into law, wrongful trading will be suspended. But even if that doesn't happen, I think that there is a general feeling in the insolvency market at the moment that it is a case of do what you've got to do to get through this. But the simple ways, I think, to help reduce your risk of falling foul of the wrongful trading provisions is really to listen to what Sam was saying, and to really keep on top of your numbers, keep focusing on those numbers on a daily basis, understanding where you are, and importantly, recording all your decisions, making sure that you've got notes in your, in your day book or online, wherever it is you keep your notes, to just record your decisions to justify that decision-making process. Because from a wrongful trading perspective, you just have to show that the decisions you took were reasonable at the time. It's not looked at with the benefit of hindsight. So if you've got those notes to basically evidence the basis on which you took those decisions, and having those numbers, having the cash flows, having those forecasts alongside that will help if there is, a problem further down the line. But I think the practical benefit of doing that as well is it helps your decision-making process. If you're forced to really go through it and make note it all down, it will help, clarify the situation for you, and hopefully help you make better decisions at this time.
Perfect.
So that's it from me. So I will hand over to Sally now
Great.
to look at it from an employment legal perspective.
Thank you, Anna. Yeah, as Anna said, so I work at Alpaca as an employment solicitor. Anna's already very well introduced what Alpaca does, so I'll kind of move on to the next part of our part. So looking at reviewing your staffing options, so where you may have some staff as a small business, and having looked at your numbers, and you may well have already done this, but it's a case of looking at what kind of cuts you might need to make to continue to operate through this time. And that may well be looking at your headcount and either reducing it completely or reducing it partly. So some of the options you might want to look at is still potentially redundancy. You still may look to possibly reduce your working week. And the other option that has certainly come up recently is you might want to take advantage of the new incentive from the government, which is the coronavirus job retention scheme. So I think really you need to look at what your employees may need to look like, what the structure of your business may look like during this time, but then also importantly, what it might look like when you come out of this, and actually how that looks like. Can you make it any leaner than it already is potentially? And looking at that, how you might look at the end of it might kind of decide what you want to do in the meantime. Really quickly touch on the job retention scheme, because it's a really important initiative come out from the government, and effectively what it means is you're able to furlough your staff. So you're able to put your staff on furlough, which means that they can't actually work for you, and if they don't work for you, you are then able to recover 80% of their salary from the revenue, up to a cap of £2,500 per month. There are kind of some nuances to it, which I won't go into the detail now, but in essence, I think it's a bit of a lifeline to a lot of small businesses and all sizes of businesses. And it's something that you should definitely explore, especially if you're looking to kind of reduce your team during this very difficult time. I think one of the top tips there is, similarly to what Jeremy said in relation to your customers, is it's the time to treat your staff right as well. So even if you're looking to invoke and rely on this scheme, it's all about communication with your staff as well. It's because if you're looking to potentially reduce their salary to 80%, then it's something you'll have to get them on board with and get them to consent to. So, and I think throughout this, it's all about communication with your staff, explaining how you're trying to build a business going forward, what you need to get through with this business, and getting everybody on board. And as we've said along, we're all in this together, and certainly with your maybe small workforce, you all need to be in this together as well. Looking at on the effect of directors though, and the impact on directors, unfortunately the government seems to have potentially let directors slip through the net a bit on these, because if you will be able to claim through the job retention scheme, if you want to furlough yourself as a director. But if you're, what a lot of directors do is paying yourself the minimum under PAYE and then claiming the rest through dividends, unfortunately, all that you would be able to claim at the moment is the 80% of the PAYE income that you're receiving. So it's really understanding that, to understand what impact that might have on your income, and how you can, what the other options you might have to explore from a job loan point of view and that sort of thing to going forward, and just to understand that that's where your position might be as a director. So that was my whistle-stop tour on the employment side of things.
Interesting, and there is a question on the furlough scheme that's in the Q&A, so that will be over to you on that one, Sally, a bit later on.
Okay.
Thank you very much, Alpaca. That's been fantastic. So the next person we're going to move on to is Jane Hartley from EY. Jane, now just to explain to everybody this slide before I click onto it. Go on.
So let's just say it's slightly busier than some of the previous slides you've seen. But I think, as some of the guys pointed out, it's probably typical of being an accountant. We probably go a bit overkill, but I think it's all very kind of relevant points that we're going to go through here. So, I mean, so yeah, just as a brief introduction for me, I'm a director in the Northern Debt Advisory team. So obviously I work with EY, which is a full service Big Four accountancy firm covering everything from tax to audit to due diligence, legal advice, people advice. But my specific area being debt advisory, where typically I work with businesses and management teams to raise debt for a variety of reasons, either if they're seeking to acquire another business, they're seeking to make some capital investment, buy out another member of the management team, or most importantly at the moment, if they're looking for working capital or to resolve a liquidity gap that the business needs going forward. So we typically work with businesses working to prepare what they need to pull together to go to funders, advise on which funders to go out to, and then kind of work with them to negotiate with those funders and negotiate kind of any of the legal documentation that needs to be done at the other end of it. So pushing on to kind of where we are at the moment, you know, we're in a very fast-moving, challenging and unprecedented times that everybody is trying to navigate through, where information flows are coming through quickly, government announcements are coming daily, and actions that need to be taken by business and management teams are coming through daily as well. What I've tried to do here, though, is just look at things from the numbers perspective and things that we think management teams really need to be kind of considering at the time being to try and protect their businesses through this really difficult and challenging period. So, number one priority, liquidity. Cash is king. I'm sure plenty of people have heard that before. And businesses and management teams really need to be focusing on the levels of cash within their business. So both getting cash into their business and also protecting the cash that they've already got in their business. So as a management team, you need to be considering what levers can you pull to protect cash in your business. You know, have you looked at kind of all the tax measures you can take in terms of time to pay, in terms of VAT deferment? We talk about furloughing, so, you know, looking at what staff you can manage without for a period of time and reduce the outflows for that. Can you defer any of your supplier payments at the moment, or any other payments? Can you ask for more rapid payments of invoices that you've already got outstanding at the moment from some of your customers? Can you look at your rent position? Is there anything you can do to protect the cash in your business at the moment? Also, look at the cash you've got on the balance sheet at the moment. How much cash have you got there? How far do you think the cash that you've got on the balance sheet at the moment can protect and support your business? How long is that going to be there for, and how much of your kind of forecast and the challenges you're facing at the moment can be protected by that cash you've already got? And once you've kind of looked at those, keep challenging the assumptions, keep challenging yourself to say, have I done everything I can possibly do at the moment to protect the financial position of my business and protect the cash in my business? Covenants. So covenants are something that you might be familiar with or might not be, depending on whether you already have any funding in your business. If you've got funding in your business, make sure you're having a look through the financial documentation that you've got in place and the documentation with your banks. if necessary, sit down with your legal advisors and get them to talk through your obligations underneath those existing finance agreements. If you've got covenants in place, if you've got controls or measures in place that you've got to deliver on, but actually you think you're going to struggle with at the moment because of the trading position of your business, have those open conversations with your bankers. Be aware of those, be aware of where those pressure points are going to be. Scenario planning. So, you know, Sam talked a lot in his first part about what can be done there in terms of looking at your forecasts and your balance sheet forecasts, your cash flow forecasts, your P&L forecasts. It's really difficult to forecast at the moment. Nobody knows how long this is going to go on for, and how long we're going to be in lockdown for, how long businesses are potentially going to be shut for. It is a real challenge. But based on what you think at the moment, based on the actions you've taken at the moment, roll forward your forecast 13 weeks, absolute minimum at the moment. And what do you think that's going to look like in 13 weeks' time if we consider that today's position stays in place for the next 13 weeks? So either, you know, you're not making any sales, or you're much reduced on your sales, your furloughing is in place, your tax relief is in place. Model out for the next 13 weeks and look at where that's going to take you. But as Jeremy said at the beginning, don't be scared of it. Knowing your numbers is the greatest thing you can do at the moment, and act quickly to look at those. Even if the assumptions you're basing on at the moment are challenging and high level and you're not 100% certain on them, give it a go, give it a bash. I know all the other all the panelists have talked about it as well. Stakeholder management. Make sure you're having a continuous dialogue with all your key stakeholders, and those stakeholders include you know, your funders, your existing bank, your advisors, any investors you might have, your suppliers, your key customers, you know, any of the legal people that you kind of speak to, and manage those people's expectations. Be open, be honest with where you are at the moment. You know, it's not going to come as a surprise to it, but keep those relationships going, because those relationships can really help you going forward. So they're kind of the key kind of 4 points that are kind of standing out. Just moving on to kind of the next section. You know, it's well publicised. There's a lot of government support out there for SMEs at the moment, and it fits in a number of different pots. So we talk about kind of the people funding measures, you know, the job retention scheme or the furloughing, the statutory sick pay. We talk about the tax support that's out there at the moment in terms of VAT, deferral, time to pay. And I'll talk, and what I'll do is I'll pick up on the government and other grants at the end. But the most important thing that I've been focusing on, and I've been talking to a number of our clients on at the moment, is the loans that are out there at the moment. So the government-backed kind of funding schemes, and that's changing on a rapid basis as well. So at the moment, up until last night, there was 2 key funding schemes in place. There was a corporate financing facility, which is for the very large businesses at the investment grade end of the spectrum. And then there's a coronavirus business interruption loan scheme, or CBILS as we're calling it at the moment, which is for businesses that are generating a turnover of short of 45 million. There was news last night coming out from the government that there's going to be a scheme put in place that's effectively covering the businesses that sit in the middle. So businesses that have turnover less than 500 million and over 45 million. Detail on that still yet to be released, and the government are hoping to kind of launch that towards the middle to end of April. Early stage detail looks like it's just going to be an extension of the existing CBILS funding that's already in place, but we still are looking for and waiting for a lot more detail on that. I think around that at the moment, if you're a business or a management team looking to apply for that kind of CBILS funding, there's a little kind of detail there in terms of the actual eligibility criteria that's supposed to be there. So what is CBILS funding? Well, it's loans provided by the traditional funders and some other ABL funders, loans of up to £5 million, but the bank is going to stand by and guarantee 80% of that funding for any business that it goes out to. So it's effectively making it easier for banks to lend out. Repayment terms of up to 6 years, financing for up to 3 years on overdrafts. What's important is that the fees and interest for that first 12 months are going to be paid by the bank. But what's also really critical for anybody who's looking to get one of these loans to realise is the fact that this is debt. It still has to be repaid at some point in time. And the banks will be looking to still assess the business based on that. So there's high-level criteria and guidance that the British Business Bank have given the funders in terms of looking at this at the moment. The acid test is really, was the business viable if it wasn't coronavirus, and would it have been a viable lender if it wasn't for coronavirus? So as management teams, you need to challenge yourself in terms of when you're looking to go for funding. Banks at the moment are overwhelmed, absolutely overwhelmed with requests for funding under this CBIL scheme, as you can kind of well imagine. At the moment, the messages we're kind of getting is those with the kind of a well thought through and formulated proposal are more likely to get a quicker and more positive response. So what do you need to be doing to get to that point? Well, you need to be really clear in your own mind and asking yourself the question, was my enterprise viable for lending before coronavirus? You know, could I have asked for the funding I'm asking for if it wasn't for coronavirus, and could the business have supported that? How has your business been impacted by coronavirus? So this comes back to doing your forecasts and actually articulating what impact coronavirus has had on your business and how much funding support you're going to need because of that. You also need to have demonstrated what other self-help measures you've taken. So this goes back to, again, the furloughing. What have you done around the tax? What have you done in terms of exhausted other areas of funding that you could possibly obtain? You'll also potentially be asked as well to kind of question what sort of shareholder actions have been taken. So slightly motive in some circumstances, but have you got any funding to continue supporting the business yourself? Or are shareholders willing to invest any more funding into their business? Or are you willing to forego some of your dividend this year in an effort to support your business? That might well be something that the banks are going to ask you about. So in terms of some kind of practical things, in terms of what you should be thinking of doing if you're looking to put together a funding application. And prior to my role working at EY, I've actually come from working at a funder. So I spent 9 years working for Clydesdale Yorkshire Bank, 6 years working for Allied Irish Bank before that. And together with my kind of knowledge of what I'd be doing if I was still sat there at the moment and what I'd be asking for potential borrowers to be presenting me with, I've kind of put my thinking hat on that. And I've also been speaking to a lot of my old kind of banking contacts in terms of what are you looking for? What are you looking for in this proposal? If it's to get a really quick, simple float through kind of credit, which these requests are going to have to do. So key things to be looking at. If you've got it, 3 years worth of audited financial accounts. And that obviously depends on kind of the size and nature of your business and how long your business has been operating for. What you need to also be able to show is management accounts, so year to date. So your year to date performance, probably to the end of February before coronavirus really started taking an impact on how was that business performing. And that does include kind of cash flows critically, balance sheet and P&L. You also need to be looking at your look forward forecasts, and this again, as we talked about, it is a challenge, but you look at those look forward forecasts and you put in place some reasonable assumptions as to what you think that's going to look like at the moment. But also you probably need to be looking at scenario planning as well. So you've got a look forward forecast that takes us for 13 weeks, but also what does that look like if, for argument's sake, we're in lockdown for longer than 13 weeks? Or for example, if furloughing only takes us to the end of April and you need to start paying people after that or bringing people back after that. What do your forecasts look like as and when we get out of lockdown and you start bringing your business back into action again? How does that look like for you and what impact is that going to have? Bearing in mind that actually suddenly ramping your business back up again might also have might also cause you a liquidity pinch, or might also demand some further cash flow as you ramp your business back up again after kind of slowing it down through this period. You also need to detail kind of the commercial actions you've taken. So again, going back to the time to pay, VAT deferment, furloughing, you know, have you kind of mothballed part of your business in this process? Detail on what management and shareholder actions have been taken to date. So this goes back to, again, deferral, freeze on dividends, any further investment, any further support that you're looking to put towards the business, or any further support maybe some of your investors, if you've already got investors, can put towards your business. Planned actions post-lockdown. So, you know, what is your plan when we come out of lockdown? How do you plan on getting your business back to pre-COVID performance again? And what does that look like in your mind's eye at the moment? And what do you think that's going to do? And kind of finally at the moment, provide any other details of any kind of current debt or kind of significant kind of debt obligations that you have, probably to the extent not provided by your existing funder. So any loans, mortgages, invoice discounting, hire purchase agreements, lease arrangements that you've already got in place. So providing the bank with that sort of detail around the kind of the funding you've got in place at the moment. It feels like a lot of information to pull together, but it goes exactly back to the crux of this kind of webinar. Knowing your numbers is really important, and actually the more well thought through, sophisticated proposal you put to your funder, the more confidence they will have in terms of your ability to be able to repay that debt further down the line. And make it easy for your bank, make it easy for your relationship director to put that proposal through their credit people. And by doing that, the greater chance you stand of getting kind of a positive answer.
Perfect.
There come my thoughts. Bit lengthy, but I think all important.
No worries. Thank you, Jane. That's been superb. Sorry. One other person that we do have on the panel, it does have to go at 4 o'clock, is Gilda Smith-Lee. Gilda, if you could just come on very quickly, and from a local government point of view, just give us very briefly, before you go, like 2 or 3 top tips maybe?
Right. So what I will do after this, Jeremy, I will send you through the links to where we're signposting business people. Yep. Most of my work really fits around supporting micro businesses and SMEs. We've got quite a bit of support available, which is being shared on the Leeds Enterprise Partnership page. There's also information on the Leeds City Council's .gov page. Like I said, I'll send that information through to you. I'm quite happy that Jane touched on the civil stuff that came out last night. But there is much more support that is available for smaller businesses, for those companies who might have businesses with a lower rateable value. I know for sure my colleagues have already been in touch and have already started sending payments out to those businesses for the £10,000 grants. There's the 25,000 grants as well, which are available, which will come out. There's also lots of information for those people who might be self-employed in terms of what numbers can be called and who to contact. What I will say is that the support is there, not always necessarily quick in coming, but you know, the government is doing the best it can at this time. There are lots of other regional organizations as well, other than the LEP and Leeds City Council, that are offering support to businesses. There's the Institute of Directors, there's Business in the Community, Federation of Small Businesses. I've got a long list of different places where people can tap into if they need the support. As of yesterday, we got some information through to say that the Business Enterprise Fund, they've got loan schemes already available. I think if anything that I like to draw to people's attention really is to be mindful of the interest rates that will come after the dare I say, the holiday periods that are being offered through loans. I mean, that's something that I'm sure is echoed across the panel. That's something for us to keep an eye out for. But I will send that information. I'm really sorry I need to drop off of the call now.
No problem.
I will make sure I send those links through, and if they're useful, please share them. And I pray that people will actually find some comfort in knowing that there is a little bit of support out there, even though it might not be for everyone. Okay, so thank you very much, Jeremy, for asking me, and apologies, I need to scoot.
No problem. Thanks so much, Gilda. That's even just in that short time, that's some really good and useful information that certainly the participants can get a hold of. So thank you so much. All right.
No problem. Thank you very much. Take care now.
Thanks, Gilda. We've had
please, if there are any questions, just direct to me afterwards, and I'm quite happy to answer them.
Yeah, of course.
Okay. Thank you.
We have had a few questions on the Q&A, and I know, Anna, you've answered one already, which is great. One for EY, and we'll answer these live as we go. So you'll have a lot of access to analysts and reports that small businesses don't. What timeframes are you modeling and seeing for your businesses and sales to start climbing back up towards normal? I know you said 13 weeks earlier. Is that the kind of guideline that we're looking at?
Well, I think a typical kind of 13-week cash flow is probably about as far out as we can see at the moment. I think probably, you'll appreciate the coronavirus at the moment is still an ongoing thing. I don't think anybody knows how long this is going to last and how long we're going to be in lockdown for at the moment. So in terms of saying, what are we seeing about kind of revenues and businesses getting back to normal? That's a real challenge, and I think that's still kind of an unknown for all of us at the moment. You hear about the government talking about kind of a 12-week lockdown period at the moment. We don't know kind of what that's based at the moment and the trajectory of the cases and what they're thinking about kind of managing that. So hard to kind of say, what are we saying about forecasting revenues getting back to normal? That's kind of a real challenge at the moment. But I think we are saying kind of forecast out, or try and forecast out 13 weeks at the moment in terms of short-term cash flow. That's kind of your 3 months, but most people are asking those to do them almost kind of on a rolling basis. It's a question on a lot of people's lips at the moment. Super. Not an easy answer, I'm afraid. And probably not the right, probably not the answer anybody wants, but we don't have any much more insight in terms of how we think this is going to play out than anybody else from a lockdown perspective.
I was going to say, to add that, Jen, we get that question on. We had a webinar earlier, and 350 accountants pretty much asking the same question: how far do we look? And it's literally like, well, we'll forecast 12 months, but we just don't know. You don't know what's going to happen within that period, as you say, because we're living day by day. We've got an announcement to happen in another hour. Who knows what's going to happen.
Super. A general question, or maybe one that might be aimed at Sally. With the furlough scheme, we're all expecting the payments, grants to come in at the end of April. Are you advising people to put those expected incomes into their cash flow forecasts? Maybe.
I think I can help with the first bit. I think they're hoping to get the portal in by the end of April, where you can actually make the claims back from the revenue. Whether the actual payments and grants will come in at the end of April, I think is anyone's guess. We'll need to process those claims. So I suspect it might be some weeks after that before the money actually comes in.
Sure. Okay. And in terms of accountants, are we actually putting those expected incomes into cash flow forecasts?
I think we are seeing them at the moment, though in terms of kind of the process around that, we do have kind of a team who are looking at that from a people services perspective. So I can ask that question in terms of they have much visibility in terms of once the portal's up and running, how quickly they think they expect the cash to come back for businesses. So I can come back on that one and have a look into it if nobody else has any more input.
Yeah, I'll be honest, because ahead of time saw these questions come through. I'm frantically on Slack asking my team, and it's one of these. I've got a response here that's saying our CEO's advice was to add a negative amount against the wages account to show a refund. They'll need to work out how much they're receiving back based on 80% of up to £2,500. So again, it's more about understanding when that date's going to be, I suppose.
I'm just doing a little bit the same. So I'm looking a bit through some of the stuff that I have as well to see if I have anything in there. So I may well come back if I find anything in a minute.
Perfect. Okay then. Let's go to this one again. Jane, you're very popular.
Okay.
Have you had any communication with HMRC with regards to VAT, and how far can we realistically delay VAT payments? Again, I think that's going to be very much how long's a piece of string, is it? Or
it is. I think at the moment the deferral of VAT deferral, so I'm reading a little bit off some information that I've been provided secondhand here. So the deferral of all VAT due from the 20th of March to the 30th of June, including payments on account, can be deferred. So it's only being deferred up until 30th of June at the moment. Deferred payments are expected to be due at the end of the financial year, but again, that's being clarified, but likely to be April 21.
Okay.
Yeah.
So it looks like those payments are being deferred.
Okay.
Yeah, I was going to say, we've had the same message of April 2021.
Yeah. One thing that is important actually to point out regarding kind of VAT deferral, what we are hearing is that whilst the VAT deferral is automatic, if you are payment on account, because this is very fast moving and it's very system automated, we are advising that people actually go in and cancel their direct debit for that, because if payments are taken on payment of account in the intervening period, even through this VAT deferral period, there's chances are you may not get that refunded or rebated back. So I would urge anybody, yes, it is automatic, but go in and cancel your direct debit and proactively stop those payments if you do payments on account.
Interesting. Okay, thank you. One for Sally. Sally, can a startup access CBILS?
I think that's probably a Jane question, actually.
It's the Jane show.
I'll pass it back to Jane.
Okay. I think it's going to find it very difficult to access CBILS. CBILS is seen as kind of an emergency funding, a last resort funding. So when you say startup, if you're really kind of at the beginning of your kind of trading journey, I think you're probably going to find it challenging if you can't demonstrate you were a viable business before the coronavirus started. So like I said, the acid test is if, for argument's sake, you were looking to borrow funding of £1 million, could your business before coronavirus have afforded to repay that £1 million you are looking to borrow? And I think you need to be challenging and asking yourself that question. If the answer is no, I think you're going to probably struggle getting hold of CBILS funding, because it is last resort funding to support a business through this coronavirus period, not necessarily to support growth or kind of any kind of startup development, if that's kind of what you're getting at with that question.
Yeah. Okay.
I think. Sorry, I'll just add to that for Jane as well. I think what Jane mentioned earlier is looking at all funding options, not just the CBILS, which I guess they've hit the headlines, but actually there is other funding available. As Jane earlier said.
Yeah, I think that kind of comes into the tax question as well, around what is the situation for startups and support. The word viable strikes out a lot of startups, but what support is there for people that are just beginning to start out and have already made investments, etc. So I mean, certainly in terms of knowing what's right for your business, there are, knowing what support there is for the industry that you're in as well. There's lots of different areas of support. Certainly still European funding is still available. I would also go, whatever your local government is, or whatever your local council is, go and speak to the LEP there, and see what kind of grant funding they can provide you. Certainly that isn't probably debt orientated, but also at the same time there are debt products which are available to startup businesses through traditional lenders and kind of what you kind of said, more modern lenders as well, through all those schemes of crowdfunding and other aspects of that. They're still running. They haven't gone away. So there's lots of different avenues for support if you can't access what everybody is talking about, which is the CBILS scheme or the what's the loan, and all that. So there is plenty out there. So we're not here to push any type of funding. There's lots out there. Just go and see what's available for your industry and your type of business.
I think it's also important to not just hone in on funding. Look at your business as a whole. It was a very, very mild winter, so utility rates are ridiculously low. Have a look, at platforms that will provide that. I know Alpaca mentioned earlier that they do procurement. Explore these options, because you might be able to find funds within your business, whether it be FX charges, whether it's your bank charges. These are things that let's be honest, a lot of businesses, utilities, banks, so on, are having to, offer payment holidays and a lot of things. So they're going to be hungry to bring new customers on, and ones that are actually, are there to pay them as well. So have a look and shop around on all other elements, not just trying to onboard debt in the business as well.
Yeah. Perfect. We may have answered this one already, but how quickly are payments coming through for various types of support?
Sorry, Jeremy, can I just jump in? I was on mute. I didn't realise I was sitting there talking to myself.
classic Zoom. Yeah,
brilliant. Sorry, no, what I was going to say was just following on from what Sam was saying, that another one that a lot of our clients are looking at the moment that we're helping them with is R&D tax claims. And I'm guessing with, a lot of entrepreneurial businesses with a lot of that initial spending that might have been done on R&D. And I think the definition of R&D is probably a lot broader than most people think it is. That is a really good way of bringing cash into the business. If you were loss making last year, then that is actual cash that HMRC will pay you. Again, you can look at maybe bringing your tax year forward and shortening your tax year. That's another good way of getting that payment in quicker. Up until quite recently, and obviously all time scales a little bit out the window at the minute, so by recently I mean I think last week, HMRC were still paying out within about 4 weeks of claims being submitted. So that's another really good way of getting some cash into the business that, like Sam says, isn't dependent on, saddling yourself with debt. And I think probably the other thing is we talked a lot about engaging with stakeholders and, collaborating and the amount of collaborating across sectors and industries and people that might have been competitors before, maybe speaking to them, maybe speaking to, big players in the industry, in your industry, that actually there's a lot of businesses out there that are cash rich and are sitting on pots of money and may well see this as a great time to invest in a business or, look at new collaborations and new ventures. So it is really engaging that entrepreneurial part of your brain and thinking out of the box and seeing what else is available, and just keep talking to people. It's amazing the number of really exciting things that we're seeing happening already.
I love that signpost to having an entrepreneurial mindset and an entrepreneurial spirit. That's right up my street. Thank you, Anna. Well done. Okay, so just go back to that question there. How quickly are payments coming through for various types of support? Do we have any insight in that panel?
Just interestingly, actually, I'm just having a quick look again on something internally from our guys on the VA, on the furloughing. At the moment, I think in terms of kind of the current information we've got, it's a case of scheme will be up and running by the end of April, with the first grants being paid within weeks. It's still a little kind of scant on detail in terms of the actual timing of that, but you're probably talking about mid-May by the sounds of it. Kind of looking at that. The government's working very hard to try and get these systems and portals up and running in a very short space of time. So, and I'm sure are going to be overwhelmed with requests for those.
Yeah. Okay.
I think the biggest impact that the banks have seen as well is India's on lockdown, and a lot of support was done in India and a lot of processing was done in India. So I was also speaking to one of the banks just recently. They said fraud's at 300% at the minute. So, unfortunately, this is create opportunists on the fraud side. So they're trying to handle the fraud piece whilst building all of these portals to access the lending, and also India's down. So, it's kind of it's not coming at a great time for everyone. No,
sure. Okay. I've actually got a question. I'm gonna put it out to the panel. And Sally, this might be one for you. How's that? You've been quiet over there. In terms of furloughing, a number of businesses will probably be made up of small businesses will be made up of directors. And if those directors are furloughed, they have key responsibilities as a director. So where do you draw the line between what they can do as directors' core responsibilities and responsibilities which may be classed as employee responsibilities, because there could be both. So
Yeah.
are they, what level of work are they allowed to do, and what's classed as kind of core in terms of directorship roles?
Well, I think the guidance we have at the moment is if it's statutory duties they're doing as directors, they're permitted to do that. Anything beyond that is arguably work, and they shouldn't be allowed to be furloughed on that basis. But it's a really tricky one, and really tricky to know how it'd even be policed by the revenue and what sort of investigation they go into that, because it kind of incentivizes businesses to shut down completely. And if the government actually wants businesses to come up and running after this closed down for these period of time, that's impossible if they haven't been allowed to kind of just tick along slightly, to think that they can come up and be ready to trade immediately is just not going to happen. So you can imagine. So I don't, it's a grey area at the moment, which lawyers don't want to say, but really they should just be doing statutory duties, nothing beyond that. But I suspect there will need to be a certain amount of just checking in and keeping things going, just to keep the businesses going. So it's a tricky one.
Okay, thank you. Go on then, Sam. Top question for you. I know you've been wanting to answer this one. How does Futrli forecast sales if it's an e-commerce business without months of data to model, or not an invoice first business?
Okay, so again, frantically slacking our support team to ask this question. I've actually just interestingly been engaging with the Institute of E-commerce. So actually, these questions are things that are coming up for us. Now, there's a bullet point answer which has 5 bullet points that I won't give, and I can give that to Mark offline, no problem. But ultimately, you can manually upload the information. So whether it's a spreadsheet that you can feed in, or you can actually manually input the data, because granted we can't pull that from an accounting software right now. But yeah, I can pick that up with Mark afterwards if you're sharing details. Super,
thank you. Okay, let's come on to this one. EY, back to you, Jane. Although VAT has been deferred, are HMRC still paying out VAT refunds? In our first few months, we are purchasing more than we are selling, so we're reliant on the refunds for cash flow.
Yeah, I don't know the answer to that one, so that's probably something I'll have to have a look into and come back to you on.
Yeah, that was from an anonymous attendee. So what I will do, if you don't mind, if that person could just take the email address off, without your email address, off this slide down the bottom right, and ask that question directly to you. You're happy to get an answer to them?
Perfect. Yeah, happy to get an answer for that.
Perfect. Thank you very much. And finally, on the questions there, if the government are backing 80%, why are some banks asking for 100%, often personal security against it? That's a good question.
Hasn't that been pushed back now, though? Hasn't that?
I believe, I think as of last night, that was really pushed back. And the majority of the banks, as far as I'm aware, have pulled back on that request. Because I think it is felt, and quite understandably, not necessarily in the spirit of how it's meant. So it is a fair question. I think the banks, there could be an element of them looking to make sure that there is an element of ongoing commitment from the management team to continue to support the business through this process. That can sometimes be why banks can ask for kind of some kind of personal security behind if it is available. And that was only if the debt requirement was over 250,000 at the time as well, I understand. So what they're looking to do is trying to cover off their 20% as well. I wasn't aware that they were looking for personal security to cover 100% of the debt. But again, I think the banks are working with all this very quickly, and I do think their approach to it is actually changing and flexing as we go through this process.
Yeah. Definitely.
I think is my understanding at the moment.
Superb, thank you. That's all the questions that we have at this very moment, and it is we're well over 4 p.m. I knew this would go on for 90 minutes. But yeah, thank you so much to the panelists for answering those questions, just being part of this. And for those who want signposting to future help, please by all means email the email address that you've got through the webinar, which comes to one of our team, and we can then signpost out to whoever needs to answer that question. But go and interact with these guys again on the panel. You know, Alpaca, Futrli, and EY are all happy, and Leeds City Council. You know, just because they're Leeds City Council doesn't mean they can help. They won't help everybody, and they'll certainly signpost you in the right way. Go and interact with these guys. Go and get the questions asked of them, and make them work.
We're just sat. In fact, I'm just going to lay on this bed. Actually, this isn't a one-bed flat, by the way. It's a spare room. It just seems a bit weird with a bed in the background. But
awesome! Thanks so much, guys. Thanks for being part of it, and enjoy your weekend. Thanks, guys.
Everybody.
Bye.
Bye.
Bye.